Happy Monday, traders, and welcome to a fresh week in markets. Okay, so end of last week, obviously markets finished quiet with the July the 4th Independence Day holiday in the US. But we did get some news on the July the 4th, and that was that Trump signed the Big Beautiful Bill. So what does that all mean? Look, this bill, the key aspects of it is that there's monster tax cuts and some monster spending. So look, it is a sugar rush for the economy. It will increase economic growth, but look, it's going to come at a cost, and that cost is debt. We have Elon Musk on one side saying that this is one of the most irresponsible bills that's ever been passed, and that it will bankrupt America. US debt at the moment's record levels at 37 trillion, and it looks as if this bill will add trillions of dollars onto debt and take US debt towards 40 trillion at the end of the year. And this is obviously the issue that Elon Musk is trying to bring out and focus on. And further to that, he has actually now started his own political party, called the America Party, where he's going to form, because he is disillusioned that it doesn't matter whether or not they're Republican or Democrats, that literally they are the same party and all they do is spend irresponsibly. So let's see how the market reacts in all of this. We have seen Asia open. Yes, equity markets have gapped a little bit higher, and as we described, this bill will increase economic growth. So equities obviously like that. But the bigger reaction, the more important, and we've talked about this before, is what happens to the bond market. So if we see the bonds sell off and US bond yields go up, and if they go up in a meaningful way, spike up, then seeing that this bill is going to increase the debt, the record debt, and it's irresponsible, then that could have a feedback loop into risk off. At the moment, we saw US 10-year yields finish around about that 4.35, and US 2 yields around about 3.9 last week. They did go up on good, basically non-farm payrolls. But if we do see US 10-year yields go to 4.5 or higher, that's the sort of levels that would start probably impacting on risk. So something to watch out for there. Okay, so some other news. We saw an OPEC meeting on the weekend. So OPEC was expected to increase production by about 400,000 barrels, but they over-delivered, and to increase production by over 500,000 barrels. So over market expectations. So when you increase supply, generally that decreases price, and that's what we've seen on the open for Asian so far. So crude has gapped lower 1% on the back of this OPEC meeting. Crude has been one of the most volatile markets over the last month with what happened with the war, but since the war in the Middle East is over, we saw crude settle back down, sub $70. I'd suggest that probably we'll see crude trade into the year end a wider range of say $60 to $70, anywhere towards $70, which is probably where you'd look to get short crude. Fair value for crude is around $65, so anywhere sub 65 towards 60 is probably value where you'd be looking to buy it. But yes, crude lower, sub $70 is probably where we're going to see crude trade for an extended period of time. Moving along, yes, this is a big week for tariff headlines. On July the 9th, which is Wednesday, is the D-Day for the end of the extension for reciprocal tariffs. Now, we've heard that Trump has said that most countries are going to get somewhere between 10 and 20%, some maybe even 60 to 70%. We've heard from Scott Bessent, the Treasury Secretary, that about 100 countries are probably expected to get tariffs of around 10%, which is the baseline minimum amount for tariffs. Now, we do expect probably a lot of tariff deals and headlines to come before Wednesday. And then also the other thing that we've heard is that once the tariffs are actually set, that they will go into effect probably on the 1st of August. So it looks like another extension of 3 weeks. But the bottom line is that, look, we're finally going to find out where most countries' tariffs are set. Market has had a lot of tariff fatigue, trading tariffs. We haven't seen any real big moves when we've had these tariff headlines. But I think that if we do see any sort of market reaction, it probably is going to be on Wednesday. And if the market views that maybe the tariffs are on the sort of higher side, maybe we get some risk off on Wednesday. But certainly, I'd be the tariff headlines and everything. Wednesday is probably the day we might see some volatility on the back of this. All right, tomorrow we do have an RBA meeting. Market is expecting the RBA to cut rates again by 25 basis points. So take the cash rate down from 3.85 down to 3.6%. We did see recently inflation, go down towards the RBA target of 2%. Down headline was around about 2.1, and we also saw recently a negative employment print. So look, market 100% expects this rate cut on Tuesday. So I don't think there's going to be a big any sort of big market reaction to that in the currency front. Although when we see Michelle Bullock, the head of the RBA, in the press conference afterwards, when we hear her speak, maybe if it is a dovish cut, where she still expects to deliver more rate cuts, that could move the market. Or potentially if she says maybe after 2 back-to-back rate cuts, and it's the first time we've had back-to-back rate cuts, for I think about 5 years, then maybe the market also will react to that, in that it is more of a hawkish cut. But yes, limited. But equity markets, ASX, look, they always love rate cuts, so I'd imagine ASX will be a bit on the back of that. Other than that, obviously markets are still trading risk on. We still have equities, very close or making record highs. The market has been, selling US dollars. That's been the trend there. So I'd imagine that we'll see those sort of trends continue to play out. But good luck with your trades to start the week, and we'll check back in with you shortly.